So if you trade crypto, I am sure you know this feeling. You spend hours, maybe days, hunting for that next big breakout, only to watch some random coin absolutely rocket up 30% before you even had it on your radar. You constantly feel like you're a step behind, right? Like you're buying the tops that the big players, the whales, are selling. But what if I told you that frustration isn't about your skill, but about the tools you're using? This is a super common problem, and just understanding it is the first step to finally beat it.
Yeah, this feeling is so universal it actually has a name, the momentum paradox. It's this idea that most traders are pretty much designed to be late to the party. And why is that? Well, it's because the standard tools that everybody learns to use are built to confirm a trend only after it's already well underway. And of course, by then, you've missed the best, most profitable part of the entire move.
Think about it like this. It's like trying to drive a car forward while only looking in the rearview mirror. It sounds ridiculous, right? But that's what we do with lagging indicators like RSI and MACD. They're great at telling you what has already happened. They'll confirm a pump for you after, 50% of the move is already gone. To get in early, you need something predictive, a tool that acts like your headlights, showing you what's coming up ahead.
Now, here's where it gets really interesting. Institutional traders, they don't have this problem. They're not sitting around guessing or waiting on those lagging signals. Nope. They use a completely different playbook, one that's built on pure math and data to actually predict these moves before they even start.
And really, their entire playbook boils down to three core pillars that give them this incredible edge. They're tracking what we call momentum physics. They're following the smart money flow, and they are laser-focused on measuring true relative strength. Let's break down what each of those actually means.
So, let's pull back the curtain and decode this alpha. We're going to walk through these three pillars one by one so you can see exactly how they come together to create a predictive edge over pretty much everyone else in the market.
Okay, first up, momentum physics. And yeah, it's pretty much what it sounds like, almost like rocket science for crypto. Institutions don't just ask, is the price going up? That's a rookie question. They calculate its velocity, how fast it's moving. Then its acceleration, is it speeding up or slowing down? And they even track something called jerk. That's the rate of change in acceleration. When all three of those things line up, they can predict a breakout 3 to 5 days before it's obvious on a chart. It's all about where the price is going, not just where it is right now.
Pillar number 2 is all about tracking smart money flow. This is how you can literally sniff out the whale's footprints before they make a big splash. See, when institutions want to build a massive position, they do it quietly. They buy the actual coins on the spot market, but at the same time, they hedge in the futures market using things called perpetuals or perps. Normally, this is invisible, but by tracking the ratio between spot and perp volume, you can see their hand. A really high ratio is a massive signal that they're quietly accumulating.
And this chart just lays out the whole game perfectly. Look at phase 1, quiet accumulation. This is where institutions are buying while the price is flat and most retail traders think the coin is dead in the water. Then comes phase 3, the markup. This is when the price finally takes off, and that's when most retail traders FOMO in, buying the very coins that the institutions are now getting ready to sell off in phase 4. The absolute key is using that Spot-Perp ratio to get in during phase 1 right alongside the smart money.
And the third and final piece of the puzzle is relative strength. Look, in a big bull market, almost everything goes up, right? So the crucial question isn't, is my coin pumping? The real million-dollar question is it pumping harder than Bitcoin, harder than Ethereum, and harder than the rest of the market? That is what separates a decent 50% gain from a life-changing 500% gain. You always want to be on the strongest horse in the race.
So we've got physics, we're tracking whales, we're measuring relative strength. I know, it sounds like a lot to juggle. But this is where the engine behind this entire playbook, MXC Pulse, comes in. It takes all of this complex analysis and fuses it into a single, simple, actionable score from 0 to 100.
The core innovation here is something they call an additive gate. Now, traditional screeners, they need every single little condition to be perfect before they'll give you a signal, which, as we know, is often way too late. This new method is different. It scores two things at the same time: the super early signs of acceleration before the breakout and the confirmation after it starts. A signal can trigger on either one of those pathways, which lets you catch the move at its absolute earliest point.
So that final score, it's not just pulled out of thin air. It's generated by this really sophisticated, multi-layered engine. It starts with timing, then it adds in momentum, it adjusts for the overall market context, validates that with smart money flow, and even runs it through a liquidity filter to screen for manipulation risk. It's the convergence of all these factors that creates one incredibly high-fidelity signal.
And the results? Well, they really speak for themselves. This methodology delivers a 60 to 66% win rate, which is just massively higher than standard strategies. It cuts down on those annoying false signals by half. And, most importantly, it gives you a 3 to 7 bar early entry edge. On a daily chart, that means you're positioned days before the crowd even has a clue what's going on.
Okay, so that's the theory, the how it works part. But how do you actually put this into practice? Let's walk through a super simple workflow that can take your daily process from totally chaotic to strategically sound in, like, 10 minutes.
And I mean it, this process is incredibly efficient. Step 1, run the screener across hundreds of coins. Step 2, sort everything by that main breakout score. Step 3, you filter for only the highest probability setups. We're talking a breakout score over 65, relative strength over 50, and a Spot-Perp score above 5. And finally, step 4, you just do a quick visual check on the momentum trend for the top couple of candidates. That is it.
And here is what that edge actually looks like in practice. The chart on the left really shows the difference. The MXC Pulse signal gets you in way back here, letting you capture that first crucial 10–20% of a move. A traditional signal gets you in all the way up here after half the move is already over. And on the right, you can see how this looks on a real chart. That bright green background just lights up to tell you a high conviction setup is in play.
To make it even simpler, here is a checklist for a perfect A+ setup. You're looking for a breakout score that's actively rising, say from 40 up to 70+. You want to see the relative strength line crossing above the market baseline. You see that green background appear, volume is picking up, and that Spot-Perp score is above 5, confirming institutions are on board.
When you put it side by side, the difference is it's night and day. The old way meant hours of manual analysis, trying to interpret subjective chart patterns, and just constantly missing opportunities. The new way? It takes 10 minutes to scan the entire market with objective data, allowing you to position yourself days before the breakout even happens.
And this quote really just sums it all up perfectly. For years, retail traders operated with Stone Age tools while institutions ran supercomputers. MXC Pulse levels that playing field. And that's what this is all about. It's about closing that massive information gap that's existed in the market for way too long.
Ultimately, what we're talking about here is a fundamental shift in your entire perspective. You're no longer chasing moves that have already happened. You are using data to anticipate the moves that are just about to begin. And that edge, that is the difference between reacting to the market and being positioned before the market reacts.
So I'll just leave you with this one question to think about. If you could truly anticipate the market instead of just reacting to it, what would that make possible for your trading?